Okay, everyone. Uh, your closing comment for today, the 4th of January 23. And it was kind of an interesting day, excuse me, especially for the second day in a row where the Dow recovered dramatically in the last 25 or 30 minutes. Yesterday, from down well over 200 to down $10, and then today it was up 133 or 0.4%, and that really does not impress me much. Although I did like the internals again, 4-1 up in the NYSE and 3-1 up in the pardon me, the Nasdaq, 0.6%, and the trading volume increased again. Yesterday it was 4.7. The day before that it was 4.2. Today it was 5 billion. So that does look a little better. We had the S&P up 28, 0.75%, but the two big winners were the Russell, home of many small caps that tend to outperform at this point of the year because plenty of people have harvested tax losses there. It was up 2181, and that was 1.25%. And the big winner on the day was the Dow Jones Transports, up 230, 1.72. So pretty decent. And um, the VIX was also down 0.89. And again, I'm going to say I was less than impressed. Um, but it did have its moments. First of all, we had the ISM, manufacturing ISM, and Jolts numbers come out, and ISM was okay. I think it was, remember that these are breakpoint 50, above growth, below not. And they finished at 48.7, I believe. Pardon me, 48.5, while the Jolts number came in gigantic. I mean, really bad news, showing that clearly the labor market is very tight. Jolts were up just short of 11 million. So a big jump. I mean, it was around here. It moved back down to just over 10 million, and here it is gaining 10%. The last thing was the FOMC minutes, and I don't understand why it had any effect at all. I mentioned it this morning. Unless you're living under a rock, you could not miss the statements of the Fed um, through Powell saying no cuts in 23. We know there's a lag. Don't expect a pivot. It's not going to happen. I just don't know how much stronger a statement can be made than that. Um, Neil Kashkari was talking about this morning. He's dramatically hawkish. And so, yeah, the number came out, and uh, the market sold off. I believe it sold off from up a bit to down pretty firmly, and then immediately started climbing back. Um, I think at that point in time, just to give you an idea, let's take a look at the S&P 500 on a 15-minute. Um, so it came out at 2 o'clock. At 1:45, the S&P was 3865. 2 o'clock came, it was down only 8 from the high. Then the next 15-minute band, ending at 2:15, showed it down $8 more. And the next 15-minute period showed it down another $20. And that was it. I mean, we made of the low of the day on this 15-minute chart was earlier this morning when we traded as low as 38.1577. Here, the secondary low was 38.35. We rallied back up to 38.50, came right back down to a 345 reading of 38.29, and yet they managed in the last 15 minutes to take it up over 20 handles for a close at 38.5293. Now, what was important about that? Well, the starting point for the Santa Claus rally was 38.44. So we made it by a whole $9. Clearly a manipulated move. And the Dow, which closed at 33.027 the day before, closed today 33.269, double what the S&P was, but in point of fact, up only 7/10. So I'm not so overwhelmingly positive about those numbers. And one thing that I've also mentioned pretty repeatedly over the last several months is all of these seasonal moves really don't mean much when a lot of the Santa Claus rallies have looked big, but really, it's hard for a move to look big in a market that moves as much as 1, 2, even 3% in a day. And a lot of those years where they considered it a positive, maybe it was up 0.75%. I mean, the volatility built into the market really distorts these things, which is why I don't really count on them much. One of my favorite positions, SI, Silvergate, 21.95 up 468, regular trade on a day where the market and several regulators gave it every possible reason to go down. And yet, in late trading, the last is 22.50, up 523 or 30% on the day. Don't get me wrong, I'm barely breaking even on it, and only because I wrote against it. But I sure am glad that those 24s expired worthless with the stock, back up in the 22 and a half area, and with a volatility that clearly makes them probably a couple of bucks. Okay, CRM had a pretty decent discussion early about the fact that they were going to cut 10% of the workforce, and the stock, in fact, opened at 141 and was a little bit higher than that, then came all the way back down and closed at 139.66. It was still up 488, 3.6%, but it also traded $2 higher than that. Microsoft, really ugly. This morning, it was down 5 pre-market. In fact, it finished at 228.52, down 11. So got twice as bad as the pre-opening. Apple, after having a down 4% day yesterday, came back 1.7%. So not so overwhelming. Okay, chart on the screen is the gold, and it just couldn't look better, which probably means it's about to top out. But the next real resistance that I can see is this 1875, currently trading, currently trading up another 280 after today's move of about 0.7%, $12. So it's added to that. As I said, this is a tough area up here, this 1878 or so, and we discussed it this morning. But when you roll this chart out a little further, this is the weekly, um, you can see that after those tops, there really isn't anything until we get to 1922. And if we, in fact, start to do that, I mean, take a look at this. This was a blow off high, not an all time high. That was back here at 2089. Then we have this high of 2078. And since then, all we've done is go down. Where did we go to? Well, let's push it out just a little further so I can show you. We got down to, not far enough, we got down to just below the 200-day MA, but also right on the 50% Fibonacci retracement. We immediately bounced up, had a running correction in here. This is the weekly. It's a little bit more obvious on the daily, so I'll just move back there. But, we had higher high, higher low, higher high, higher low, higher high, higher low. Just riding this 5-day moving average, which it crossed through and never went back from all the way back here in, let's see, what's the date here? First week in November. So it's been pretty much on a tear. And up until the last couple of days, the silver dramatically outperformed. But today, with the gold up 12 or 0.7%, the silver was actually down 27 or 1.1%. So it's kind of given up that performance advance. But, as Dennis always tells me, this is the way that the markets trade. They don't have to do anything on a day-by-day basis, but theoretically, it doesn't look so bad, except that, yesterday it was down 27 cents, and today, it was down, 27.2 cents, and today it's, the day before, it was as high as 24.77, and today's low was 23.74. So a reasonable pullback. But I also want to remind you that there's something else that Dennis has made mention of repeatedly, and that is the advantage that owning the only S&P 500 gold mining stock, which is Newmont. And in general, I would have to call both of these markets, gold and silver, as trending markets. And when the metals tend to trend well, the miners outperform about 2.5 to 1. So, that's just something to put aside. We own some. I think we own it higher, but I could certainly live with that as a long-term position. Oil was down another $4 today, $4.03, 72.84, and unfortunately, it actually traded lower than that. If all of this bullshit about everything being so great in China, I would certainly not expect to see oil selling off in basically 3 days from 81.5 to today's low of 72.73. I mean, that's a pretty massive move. We are back in an area of support. I will certainly consider doing something there. But the other one that would be moving higher also, if things were getting better, would be the copper, which is about unchanged tonight, but well off the recent highs, and was down on the day today. Let's just take a quick look here. It was down 4.5 cents, which is not overwhelming, but nonetheless is over 1%. We did, in fact, bounce off this 100 day, 100 day, the 50 day um, bounced right off there and closed just a little above it. But as you can see, even though it's trying, basically all it's done is make a series of higher lows and higher highs. But we're definitely in an area that could prove to be very difficult unless there's some sort of real news to go along with it. This is the weekly for 3 years. So, you can see the beginning of an uptrend here. Doesn't look anything like this one does, but it is a start. So we'll have to see how that works out. All right, everyone. That's about it. I'll be back first thing in the morning with a pre-opening comment. And because tomorrow's Thursday, it's claims day. And let me just check and see what else we have tomorrow. Tomorrow we have ADP numbers. We have initial jobless claim numbers. We have November trade balance, which of course is going to be a huge negative number. We have the final IHS market services PMI. That doesn't come out until after the open, and the EIA nat gas and crude at 10:30 and 11. We'll have to see how those things shake out, but on a day-by-day basis, everything seems to be holding up pretty well. All right, folks. Hope you had a good day. I know I really liked that SI